Good morning, team. Welcome to Swing Trading Live. If you've never been with us before, basically what we do is we break down the market, break down some top stocks, to give you swing trading strategies, give you help, give you guidance, and everything you need to be a profitable swing trader. So anyways, on today's segment, let me get rid of my face because, that's not as important as the chart. So anyways, what we're going to look at is the overall market, because the overall market obviously has a huge effect on individual stocks, and typically we're trading individual stocks or maybe ETFs, which is the overall market. So either way, when we analyze the overall market, we have a better understanding of where things are going. And when we do that, we just have a better understanding overall. So when we want to understand the overall market, the S&P 500, the first thing we want to do, we want to start out on the daily chart, on the long-term chart. What is going on here? So again, we zoom out to a daily chart, which means that each candle represents one day. And when we do that, we get a better understanding of the long-term analysis. Now, again, Monday was Labor Day in the United States. I know that's not a thing for UK and Europe and stuff like that. But again, the US markets were closed. Futures did tend to trade a bit, so we'll look into that activity here. But anyways, we didn't have much activity. So again, we're going to see a lot this morning for people who held over the extended weekend and are hoping to sell their positions if they were trading long or whatever they were doing. So we're going to see a lot of extra volatility this morning, especially in the first 5 to 10 minutes. So expect that coming as well. But looking at it from a daily perspective, what we're seeing here is the market is trending up, but right now we are in a downtrending phase, right? If I just bring out this little chart, you can see here, oh, look, we're trending up. Okay, but now we're in this little downtrend phase, right? The market is full of different phases. We have uptrend phases, we have downtrend phases, we have uptrend phases. And then once the downtrend phase is broken, once it gets above, certain levels, then it becomes uptrend again. And it's just a natural ebb and flow of the market. So right now we are in a downtrend phase. You can see here that we're being held down by the same resistance point and we're holding the same support, but the support is getting lower and lower and lower. So again, this is the setup of a bearish market, of a downtrend, again, which is not the best. So again, when we look at the market, we're going to be hoping for a reversal because long term, right, we don't want to see a crash. But we never go against the trend. If the trend is down, well, then guess what? We're going to be trading down. So we're going to be talking about a lot of bear market strategies today. So again, stay tuned for that. But that's kind of what we see here. Let me remove these drawings. So long term, what are we seeing? We are in a long term uptrend, but we're in an immediate downtrend right now. So that's going to be the trend that's going to prevail across all things. Now, if we move to a 5-minute chart, getting closer, what we're going to see here is the activity over the last couple days. So again, what we saw here is we kind of saw the top out around August 16th, and then we've slowly been downtrending ever since. We've tried to pick up a couple times, but then it just crashes, right? Friday had a very, very strong close. I don't know if you remember Friday, but this right here is Friday's trading activity. I'm just going to do the high and low of Friday. So again, this was the low of Friday, Friday being from here to here. So this was Friday's trading activity. Let me also just do a resistance point. So I'll just like to extend it. But anyways, so the high and low of Friday was right here. Friday opened here and closed here. So you can see here that we came down a bit on Friday. Then we ended up pushing into a very bullish close on Friday. So we were very optimistic over the weekend. But like I said, futures still traded yesterday. So we had a lot of activity, mainly from people in non-US markets, right? Because US people are taking a break were yesterday, but it was still a normal business day as usual for the rest of the country. When I mean like other countries, and so they had a trading activity and they dominated trading activity. Not saying they have a clear bias against like driving the market down, but their activity held a lot of weight because we had no U.S. traders to trade against them or to trade for them or whatever. So here's kind of what happened. We pushed into this level where we had a strong resistance point, right? We still gapped up, showing some bullish activity. But then nothing much happened. If you're wondering why this long red candle on the initial open, this is because of one main reason, right? If you see a very, very strong close, you're typically assuming it's going to gap up the next day. A gap up is what? An uptick. When you have an uptick, you can make money. So again, what they did is there were a lot of people most likely who bought long overnight. And so they bought long, and then when it gapped up, again, we're talking about huge traders who can take huge positions from professional firms, almost a 1% gap up. So again, these people are trading with $1 million. 1% is huge. So again, a 1% gap up, when they see it's up this much, they start selling, and we have all this selling of these shares all at once because they're taking profits from this gain, leading to the huge red candle. Anyways, so far, what we've been seeing on Monday's price action and today so far in pre-market is that yes, we gapped up, but we hit this really, really strong resistance at 401 if we're looking at SPY. Um, Wait, this is Tuesday's, Friday's activity. Oh, I'm on the wrong chart, but same deal. So you can see here, September 2nd. So this is more Friday's activity. Crash. Anyway, so we see Thursday, Friday. I'm off a day. I thought I was looking at ES1. Um, Anyways, ES1, here we go. Yeah, so we had this activity, and then we had the huge rush down, and then we had a push up. So what we're seeing here is Friday we had the huge crash down after the huge push up. Anyways, ignore that. It wasn't wrong. It was just looking at the wrong thing. What I wanted to look here was this activity right here. This activity is what is happening. So what I was previously showing was the S&P 500's activity from Thursday and Friday. But what I wanted to show you is how it behaved on Monday, yesterday, and how it behaved so far pre-market. So again, this right here is the trading activity for Monday. This right here is the trading activity so far for Tuesday. So this is kind of what we're looking at here. Very, very range bound, very, very choppy. And what that means is that we're going nowhere, but we do kind of have this option where we're kind of moving higher, where the lows are getting higher, but there's nothing strong here. And what I really wanted to point out in the overall market right here is the double bottom that seemed to form. So again, if we're looking here on the market, let me clear this chart just so it makes more sense. What we're looking at is we had a clear top, we rounded up, we came down, and then now we're hitting a double bottom. And what I mean by that is we hit a level, we then ended up having a huge run up, right? We hit this level, then we had a huge run up, then we crashed back down, found support at this level again, and now we're starting to slowly push higher. A slow push higher is typically a safer move because the market doesn't just push up high. The market will crash fast. The market will not rise fast. So when you see a slow crashing, it's typically not a good sign. You see a fast rising, is typically not a good sign, right? We have fast crashes and slow rises. So although this is super choppy, having a slow rise is typically more on the healthier side of an uptrend market. And so again, hitting this double bottom is going to be what we're watching. And so again, how do we adjust from what's going on here? Well, we're going to assume this double bottom is indeed a double bottom until it proves us wrong. What does it mean if it proves us wrong? It means that it breaks this level, or it hits this level again, or breaks this level. So if the S&P 500 market, again, this being the S&P 500 futures, comes down to this level and breaks it, then this confirms that the double bottom is not true. However, if we start to slowly trend up, then we're going to confirm this double bottom is true, targeting the next strong level of this, which is around here, 4117, 4117, and then eventually 4316. Now, again, that is what we're looking at if a double bottom has formed. If not, another option, because I want to cover both sides, is this. We're forming a descending triangle where we're going to come up, we're going to hit this top. So again, option number one is do double bottom straight up, right? This is option number one. This is our happy bullish idea. Let me remove. Oh, I can't really remove that. Anyways, that is our bullish idea. I'm gonna remove. I hate removing. Start over. Option number two is we're still because we're still bearish, is having a descending triangle. So what that is like this, where we squeeze into a range and then we break out below and have a breakout to the downside. Why is this a thing? Well, if you don't know much about triangle breakout patterns, it's quite simple. Triangle breakout patterns are continuation patterns. They happen during trending markets. Right now we are trending down. What do I mean by continuation? Well, whatever trend was happening before the triangle is the trend that's going to continue more times than not. Like I'm talking about like a 90% thing on this. So if you're seeing stock trending up and then it forms a triangle, well, you're going to expect a breakout to the upside. Well, here we have a previous downtrend and we're forming a triangle. So this is option number two, is that we hit here and then we kind of trend in this range, and then we break out through this level and head lower. So again, this price action can take a couple days, and then having the breakout on like Wednesday or Thursday. And so again, if we're having that idea, maybe a breakout to the downside around Wednesday or Thursday, then we can look at news and see if anything's going to correlate with that, because we're going to see market news correlate with market activity, because again, they're all priced in either way. So that's kind of what it's looking at from that perspective. So that's kind of our bearish assumption. So we have a bullish assumption of a double bottom. We have a bearish assumption of a triangle breakout to the downside, and then a neutral assumption, which should be nothing happens. If nothing happens, what we're really looking at is drawings. What we're really looking at is a break between this level and like this level, and it just stays trading in that level with no clear breakout either way. That would be a very neutral output. So that's kind of what you're watching from that perspective. Let's look at the economic calendar for this week. So Sunday, Monday, who cares, right? Here we go. Oh, okay, so Canadian had a big holiday. I guess Canadians celebrate Labor Day or something similar because they were off as well. Tuesday, today, what we see here is we have a report at 10 a.m., the ISM Services PMI. Again, we have one sooner, but it's not as important. You can see here orange folder, red being more important. But what we can see here is that ISM Services PMM comes out at 9 a.m. So that's roughly in 45 minutes, because again, this is the EST time. So again, you have to bring it back an hour for CST, which is what I'm in. So 45 minutes. The final services PMI will come out in about 30 minutes. So again, we have these two reports coming out today. And again, we'll track that later and see what happened with that. But nothing much right now. Next, on Wednesday, you can see here most reporting from Great Britain and Canada. Some important news. I don't think too much that will affect our market. For our market, we have a couple FOMC members speaking. We have Mester speaks and Bernard speaking. So again, that's kind of what we have. Nothing too much on that end as in reports. But again, these are important people. So whatever they say, we'll be able to get the minutes of, and we'll take a look at that. Thursday, we have one major report because Fed Chair Powell speaks. This is the most important dude. And at the moment regarding federal fund rate issues. So again, we have Fed Chair Powell speaks at 9:10 a.m. So that's going to be a couple minutes before market open, but that's going to be during our live stream, so we'll be able to cover what he's saying. We also have on Friday a couple minor members of the FOMC speaking as well. So we'll be looking into all that later. But no major news today. Wednesday we'll have some stuff, and then Thursday we'll be able to cover on the live stream Fed Chair Powell speaking. So that's kind of what we're looking at for the overall market. That is about it until we have the opening bell segment, which is where we look into what's happening at market open as well as other top stocks. We'll get into that here in a second. But first, I always do a training segment inside this live stream. And so the training segment is just a way to give you an advantage. And so I know that a lot of you guys are trying to trade the markets but may not have a large account, right? You have an account that's $1,000 or less, and you're like, how do I grow this account? So anyways, we're going to go into that training segment right now. Then when we come back, we're going to do opening bell on top stocks. So anyways, let's do that. So stay tuned. There's going to be some great content. So Hey team, welcome to this mini training series on growing a small account. So anyways, let's jump into it. This is video 1 of 3. So make sure you stay tuned and watch all of the videos to get the most out of this little mini course. All right, so the course outline for this is in video number 1, we're going to go over the golden rules for growth. And video number 2, we're going to go over the setups for exponential growth. And in the final video, we're going to go over why it's meaningless without this mindset. All right, so for this video lesson right here, the golden rules for growth, we're going to go over defining your risk management rules, defining your trade setup, creating a checklist for that setup, start paper trading, start live trading, and then increasing your size responsibly. So defining your risk management. What is risk management? All right, so ideally you want your risk to reward to be 1 to 3 or better. And better means a larger second number. So 1 to 3, 1 to 4, 1 to 5. And why is this? Well, because that number stands for this. The first number is how much you stand to lose. The second number is how much you stand to make. So a 1 to 3 risk to reward means that you're going to risk $1 to make $3. And so obviously for the amount of risk you're taking, you want to be able to make the most money, right? So a 1 to 4 would be better than a 1 to 3 because you're risking $1 to make $4 instead of risking $1 to make $3. And so here's kind of how it works. You have your risk to reward. When you're risking $1 and you're making $3 back, then that means you only need to win 25% of the time to break even, right? So if only 25% of your trades win, you're still going to break even and not lose money. Now, if your risk to reward is 1 to 1, which means you risk $1 to make $1, then your win rate has to be a lot higher, especially when you're losing more than you're making. Your win rate has to be a lot higher. And so when you put the odds in your favor, for instance, a risk to reward of 1 to 5, you only have to be right on your trades 17% of the time, which is really amazing, right? Because the stock market is always hard and the market always gives us trouble. So sometimes you're not going to make money. Sometimes the trade goes against you, but that's okay because when you have a great risk reward, then you can lose more than you win and still make money. All right, so it is better, the better your risk reward, the less you have to be right. And that's what I kind of wanted to get over with this risk management part of this lesson. All right, so define your trade setup. So you need to have a reliable trade setup and pattern and system that you use. And so what we teach here in the software is a trend following system. So again, you can use a trend following system if you'd like, or you can use something else. Just make sure that it's been back tested and that it works. All right, but I'm just going to go over this one because this is the one that I know works well for a lot of you guys and I use myself. So what a trend following system is, like this, is a trending band indicator. So when it breaks above the green line, we know that the stock is throwing momentum to the upside. So this trade setup is defined as when a stock gets above the green line, you buy, you set a stop loss, and then you slowly move your stop loss up as the stock moves up as well. And that's how this setup works. And so you're really trying to find something like that. So for instance, if you're looking at a triangle breakout straight trade setup, then you're going to be like, all right, when the stock comes into a triangle, you're going to buy here, you're going to set your stop loss here, and you're going to exit when it either hits your stop loss or when it gets to a certain growth. And so that's what your trade setup should always be like. Before you enter a trade, you should always have these three numbers in mind. Where am I buying? Where is my stop loss going? And where will I exit for a profit? And those are the numbers that you always need to know for every single trade you get into. So that's something that I highly recommend you look into. All right. A checklist for your setup, right? So we've already defined how the setup will work, but we need to put it in words and writing so that we can't mess it up. So that every time we go and look at a stock, we have a specified checklist to look at to verify if that stock is a good stock. Because when you're getting into trading, there's a lot of emotions that go on. And when we can systemize this process, then it's going to make it a lot more likely that we actually buy great stocks and make money. So our rules or our checklist setup for the trending band indicator or this trend following system is this. 1, find a stock that is a great buy, aka what the software defines as a great buy is a stock that just broke above the green band and also headed in the upward direction. All right, checklist item number 2, find a risk to reward of 1 to 3 or better. So 1 to 3, 1 to 4, 1 to 5, etc. We want to make sure that we have the risk to reward on our side as well. As we just mentioned, the better our risk to reward, the less we have to be right. All right, checklist item number 3, an average volume of above 300,000. This is because we want to be able to get in and out of the stock. Volume is very important for liquidity, and so we got to make sure that's that as well. Now, checklist item number 4 is accuracy above 80%. This is something you'll only be able to see on the analyzer, but that's actually what we're looking at here, right? So we're going to see an accuracy above 80% just to know that we have some confidence with this trade, right? We only need to be right 25% of the time with a 1 to 3 risk reward. So 80% is definitely going to match that criteria. And then we're going to place our buy, and we're going to place our stop loss orders according to the software. And that's how this checklist works for the trending band indicator. All right, then we're going to start paper trading once we have our system built, once we have our checklist built, because we need to build confidence and trust in the system we just built, right? So hopefully in the first place, you're using a system, you're using a strategy that has already been back tested and proven to work. But in addition to that, you need confidence in the system yourself. For instance, I can use a data-backed strategy like the trending band indicator in that trend following system, but I still had to paper trade it for about 2 months to just give the confidence in myself. Okay, yes, the data proves this works. Yes, I've been paper trading this for 2 months and it works. Now let's move to real money. And so that developing of confidence and trust in the system is something that's a very important step. And when you can do that without having to put your own money on the line first, it's a great thing to do. So a great platform to start paper trading on is TD Ameritrade. You should be able to open an account with them for free if you're a U.S. citizen, I believe. TradingView.com, you can open up a free account and start paper trading regardless of your country. And Excel, right? You can just mark the price where you want to buy that stock at, and then track that stock over time, and then say, okay, I sold here, it bought here, and you can just manually do it yourself. Now, hopefully this paper trading system doesn't last longer than 2 months, right? You don't want to get so scared that you actually never get into the real world of investing. And so make sure that you do give yourself some time to check it out, but don't spend too much time in the paper trading world. You need to get into the real world to start making money. All right, so then we're going to start, as I said, we're going to get into the real world and we're going to start trading with live or real money. So once confidence is built, we're going to start trading with real money, and you don't want to risk more than you can handle at first. So this is how you calculate the amount of risk you can handle when you're trading your first stock. So let's go down to the total position size. This is the formula you need to follow. So our total position size, which means the amount of money we can invest in a stock, should be the amount of risk divided by potential for loss. So what does this mean? Okay, let's say I'm only comfortable losing $100, right? Like I can only stand to lose $100 on a single trade. Now for you, that may be $10, that may be $5, that may be $500. Whatever it is for you, define that. How much are you okay losing on this trade? And so for this example, let's say I'm okay with losing $100 on this trade. Okay, so $100 divided by the potential for loss. On the software, when I do my math for the stop loss, what is my percentage for loss? Let's say the percentage for loss on this stock, or the stop loss percentage, is 5%. So I'm going to do $100 divided by 0.05, the percentage in decimal form, right? So 100 divided by 0.05, and the amount I get is $2,000. Okay, so the amount that I can invest into this trade when I'm starting off is $2,000, because when I have $2,000 invested at my stop loss of 5%, then that's what I'm going to lose. My max loss will be $100. And you need to be able to confine your max loss, because if you start losing more than you can handle, your emotions are going to start going through the roof. You may start to revenge trade. You may start, or you may just get super down on yourself and not even continue trading or not investing because of how much you lost. So make sure you understand risk management. If there's one thing you get from this first video, it is risk management, and checklist is what you need. All right, so the last but not least is increase your size responsibly, right? So once you have that set up, let's say you're okay with losing $100, well, let's slowly start to increase that, right? So maybe next month you're okay with losing $150, so you start adding more size, so you start investing maybe $3,000 into every single trade or something like that. So once you can lose money on a trade and still admit that is a good trade setup, then you start increasing your size. What does that mean? All right, so some people, every time they lose money on a trade or investment, say, well, that was a bad trade, right? Like that was obviously a bad trade. I didn't make money. A bad trade is when you don't follow your system. So the reason why this is bad is because some people don't follow their system or checklist and make money, so they think they're fine. But if you don't follow your system or checklist, then your accuracy declines, your profitability declines, and overall, it's just not a good setup. Trust me, I've done this myself. I watched others do it. When they start to get off book,
then they start to make a bunch of losses. I've talked to people, Austin, I'm losing money. I don't know what I'm doing. Hey, what's your system? Well, it's this. Well, why aren't you following it? Oh, you're right. Guys, you need to stick to your system. But on the other hand, when you're able to lose money following your system, you followed the system. It just happened to be the one time when the system doesn't work. And you can say that was a good trade because you followed everything. Then you're in the right mindset to start increasing your size. All right, guys, this is video number 1 of growing a small account. If you want to check out the next video, please do so. If you ever have any questions, feel free to let us know. Anyways, this is video number 1 of growing a small account.
All right, guys, so that is video number 1, as it just said, of growing a small account. We'll be sharing video number 2 and video number 3 tomorrow, and then Thursday. Yeah, Tuesday, because today's Tuesday. We're sharing it Tuesday, Wednesday, Thursday. So today, tomorrow, and the next day. Anyways, so that's a fun little series for those who want to grow a small account. Anyways, back to the market. What is going on here? What's happening? What is our game plan? So, we're going to be discussing the S&P 500 and then top stocks. Anyways, 5 minutes until the market opens. So let's kind of look at game plans there again, and then we'll look into top stocks, and then we'll start going from there. For those who are live, thank you so much for being here. If you have any questions, stocks you want me to break down, feel free to put it in the chat. I do see the chat, and I would love to answer those questions. Anyways, let's get our disclaimer back up, and let's get this party started. So, here we go. So again, this is the overall market. This is a zoomed in 30-minute type of chart. But if we zoom out here and we go to the daily chart where each candle represents one day, what we can see here is we are in a long-term uptrend, right? We're going higher, like we're starting at the bottom left hand of the chart and we're moving up. So again, we are uptrending. But if we're talking about different phases of the market, right? We have an uptrending phase, we have a range-bound phase, we have crashing phase, or I should say a bearish phase. We have a bullish phase, and now we're in a bearish phase. So we're in a downtrending phase. We know this because trends are identified by their highs and lows. If you're in an uptrend, the highs are getting higher and the lows are getting higher as well. If you're in a downtrend, it's the reverse, right? So getting lower, and your lows are also getting lower. So right now we are in a downtrend. Our lows are getting lower and our highs are getting lower. So how do we change this? How do we know when we're in an uptrend? When it does the opposite, right? When instead of making lower highs and lower lows, one of these lows gets broken and one of the highs gets broken and we start making a higher high. The next thing you know, after that higher high comes a higher low. And then we start changing, right? And we start moving to an uptrend. So right now we're in a downtrend phase. We're going to assume that trend's going to hold until it doesn't. So if we zoom into a smaller time frame, let's say a 5-minute chart, we're starting to look at these specifics for this week. You can see here last week we had a very, very red week. My long-term investment portfolio, which I have a lot more money in than obviously my swing trading, because that's just long-term holds in various ETFs. I think lost like 15 to 18 grand. So that was always fun. But again, it's an investment. Who really cares? Because like in 40 years, it's going to be great. But at the moment, what we're looking at for a short-term market basis for our swing trading accounts is what is happening to the overall strategy. Well, it's quite simply what we're looking at is a couple of setups. One that I'm hopefully looking for, and this is the one that I want, but again, it may not be one that the trend actually tells me I'm going to get. But this is where we're having a previous down move. Then we have a strong support level here. Why am I getting these mixed up? A strong support level here, push up, crash down, hold this level as support, and then we start trying to trend higher. I'm hoping on the volume from this morning when the market opens and the first 15-minute activity that we set more of a bullish movement and saying that, hey, we're going to head higher, because if we continue to head higher, this double bottom will be confirmed and we can hopefully retarget these highs and have a very bullish week and hopefully reset and claim some ground to have, kind of reverse the downtrend. So that is option number 1. The next option is simply a triangle breakout to the downside. So again, we have like a solid resistance here that we're hoping is a double bottom, but it could also be that this downtrend still holding, we trade within this range and then move lower. So who knows? Either way, if we hold this level, then we're probably going to try and triangle breakout. If we break above this level, we're probably forming a double bottom. So we'll be watching those two levels today. They're going to be of key importance. So that's what's going on there. For top stocks so far today, We have BAT-RK, we have RWM, which is an ETF, BTAL, which is an ETF, I believe. Play, which is Dave and Buster's, DG, which is Dollar General, and VSC, which is Vistra. So we got a lot of stocks here to examine, and we will in a second, but the market is opening here very soon. So let's go into that and take a look. So 1 minute chart, let's see what are we looking at for the trading day. Okay, 4 minutes. I mean, 4 seconds, 3 seconds, 2 seconds, 9 seconds. Ding, 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 ding. The market is open. So let's take a look. What is going on? We're going to actually take a look at the S&P 500 from SPY perspectives. You can see here, this is the trading range from Thursday. This is Friday. We hit up against this resistance and then said nah, and then crashed back down. So again, this is potentially our double bottom. So again, this is a potential double bottom, what we're looking for. So again, hopefully we can hold this level. If not, then not. But here we go. We're seeing that we're having an opening green push in the market. So that's actually quite a good sign. I was expecting more of a crash. But again, we kind of saw that already from the previous day. Anyways, we're having a huge push up. So again, that's quite good. You can see here a huge close. This is exactly what I'm mentioning yesterday when I mentioned, not yesterday, Friday, when I mentioned that Friday end of close is going to have a lot of trading activity. Look at the volume bar on this like last candle here. That's insane, right? Literally so much. Right here, it was volume of 464,000 shares were traded in the last minute of price action. That's quite insane. So far this morning on the first candle, we have 58,000. So again, a lot lower than 400 and whatever. Anyways, we're seeing here is that the market's trying to push up. We have a minor resistance here at 393 or 394. So again, this is going to be our resistance that we're holding for a bit. But again, we'll look back here in a second after we go through top stocks, because the 15-minute analysis is in the first 15 minutes of price action will give us an understanding of how the market will trend the rest of the day. And so we can look at that here in a second. Anyways, reviewing our top stocks. Let's open one of these up in a new tab and take a look at these. If we don't find any good ones, then we'll go to the screener and we'll look from there. So, yay, I'm the leaderboard. Anyways, we have PAT-RK. So you can see here that we're trying to trend higher. We're trying to push up. We have a 78% trend score. So again, the ideal ratio for the Impeccable Stock software, which helps you find swing trading stocks that are going to profit and then give you the game plan, where to buy, where to sell, and all that. The secret formula, it's not really secret, but you want to look for these two things to have a very profitable trade, and that is a recommendation of a great buy and a trend score above 90%. It is very hard to find a trend score above 90% right now, because the trend score factors in a lot of different factors. It factors in the stock's performance, this individual stock, how it performs, like its historical trading history. It looks at the trend description, how well the stock is trending in the past year. It looks at the recommendation, how well is it recommended, or its status right now. Again, great buy is the best status, buy is the next best, and we have neutral, and then we have sell. It looks at the overall market rating. This is the reason why most trend scores are really low right now. The overall market, the S&P 500, has an overall rating of 53%, right? It's in a downtrend. It's neutral. It doesn't know what's going on. We're at a 53% rating on that based on math and trend. So again, the accuracy. So all these are combined to give us a 78% trend score. So again, that is the side effect or the one bad aspect that we have looking at BATRK. Again, if we look at a traditional chart here, actually, let's do this. I forgot to change. I like to enable it to full screen so that it looks better on your viewing experience. If I go back, let's just go back. Here we go. Now we have bigger charts and bigger screens, so it's easier for you to see. Anyways, so if we go to the trading view chart, you can see here that we have a resistance at 28.20. So again, if we can break above that 28.20, we'll be doing good. You can see here that we did form a higher low. If slightly, we did still, and we're trying to push higher this market this morning so far. So we're looking to break that 28.20 level. If you break above that 28.20 level, you should be able to target the 31 level. If we do break 28.20, then again, that is going to be your entry level with a stop loss around 26.83. So you're going to have a stop loss here with the chance to make a profit up to around 31.15. So that would be kind of like a game plan on that. And you can kind of see here that's what the game plan is. Buy roughly around 28.20. Yeah, that's kind of like our high level. Take profit around 29.84. So yeah, around this level, kind of expecting here. With a stop loss around 27.16. So yeah, roughly about what I was saying. With a risk to reward of 1 to 2. Again, if you have a take profit around 31, it's going to push it more towards the 1 to 3, which is a better risk to reward. So that's kind of what you're looking at for the game plan for that stock. There we go. RWM. So you can see here. Let's see. Let's just go to the all real quick. We've been trending down. I don't know what exactly this is. I know it's a ETF. It's the short Russell. Okay, so yeah, it's the inverse of the Russell index. So this is an inverse ETF. As you can see here, it's moving higher. This must mean the overall market is heading, yeah, it's starting to head down a bit. So yeah, that's kind of what we're seeing. You can see here the overall market was down last week, and so because of that, this stock is up this past week because it does the inverse. So looking at inverse is a great opportunity to make money again because we are in a downtrend. That means your options to make money and your different strategies include inverse ETFs. It includes put options, which go up in value as the stock drops. It includes credit spreads as well as debit spreads. And you also have things like covered calls on stocks you're holding long term. So we'll get more into that strategy after covering top stocks. I just need to refresh every single page. Batal, which is another ETF. Again, it looks like it's going from bearish and slant and going up to neutral here in 2022. So that's a good sign. You can see here very neutral and now trying to trend up. Again, you can see here 18.50 is the support level, $22 is the resistance level. We're trading within this range and not seeing too much activity since we're in the middle. Yeah, when you're in the middle of something, it's like no man's land. If you play sports, for instance, if you play tennis, right, there's this idea that there's a no man's land where either you want to be at the baseline, at the very back, or you want to be at the net. You don't want to be in this middle zone just staying there, right? That's the same thing with basketball, right? You're not just staying at the half court line. You're either protecting the goalie or staying there to get an assist, or you're going to the other side to defend, right? Or like you're either attacking or defending. You're not just in the middle being passive. And so again, that's kind of what we see here, right? The stock is being very passive. There is no clear entry because we're in the middle of no man's land, which where anything can happen. So that's what we're kind of looking at Patal. Again, if we're following trend, because again, the stock is trending higher, you have a 1990 to 20.5 around buy level. Take profit around 21.91 with a stop loss around 19.37, giving you a 1-3 risk to reward, which should be a good setup as well. Because again, we are long on the short term trending up. We had made our higher highs and higher lows. So again, the uptrend is confirmed. So that is an option as well. Okay. Play, which is Dave and Buster. You can see here that we're trying to trend higher. We have an 84% trend score, which is really good, especially for the current market we're in. Buy range around right now, or actually a little lower. Actually, I think we're within the buy range right now because it just dipped down this morning. But take profit around 48.39, stop loss around 40.92, with a risk to reward of 1 to 5. So, anyways, if we want to look at a more charting analysis of this, you can see here how we have a high of around $50, which we can target. And again, we can use this previous low as our stop loss. So around $40 as our stop loss, which gives us that huge risk to reward, which is always good in our favor. But again, I would ideally wait. Again, it says 41.42 again, which can be a good level, but I would ideally wait for a breakout above $43.98 or $44. Why is that? Because when a stock is trending up, you want to buy the breakouts. You want to buy the breakout above because that shows that momentum is continuing. We don't just buy when a stock is going down to buy because that is not going to help us long term. If we're buying when it goes down, it means we're hoping that it's going to reverse. But guess what? Nothing's stopping it from continuing to trend down. When I put my money in something, I want it to increase in value. So that's why I buy when a stock is trending up above breakouts, because when it breaks above that breakout, momentum and energy is moving forward. I can buy into strength and follow that movement up instead of buying on weakness and hoping that it starts to reverse and wasting a lot of time in their waiting process, which again, you don't ideally want to do. So that's why you buy breakouts on trending stocks. And then so that's kind of the setup on there. DG Dollar General last closing 24251. Looks like it's being about flat or neutral today. What we're looking at is buy range around 239, 246. So again, we kind of moved into that buy range this morning. Take profit around 265.06. Stop loss around 235.23. Risk to reward of 1 of 3. So yeah, that kind of sets up well. Kind of looking at the chart. You can see here that we have resistance at 260, a support around 243, but we do have a huge gap down around 190. So this is something that I would not want to trade long right now because of this right here, right? The trend is up and we are trending up, but from a personal perspective, look at our gap to the upside, right? We have a gap to the upside that gives us a 6% return, but our gap to the downside is what, 22%. So again, when we're trading within this range, I want to buy near the lower portion of the range. When it comes down, forms a doji candle, starts to reverse and show the dip buy setup, and then starts to head higher. So that's ideally what you're looking for. VST. So VST, slowly starting to trend higher. Looks good. What's the performance on this? Around 1.3 yearly. Yeah, that's what I'm thinking. Because you can see how choppy this stock is. It's very, very neutral. It's coming from a downtrend. It doesn't do much in direction wise. When we're looking for a stock, we want to see clear direction and clear movement instead of something like this where it's just going nowhere. And so that's kind of a bad stock. Probably why it has a 73, almost a failing rating. So yeah, makes sense. So yes. CVHTV, top stocks today. Anyways, that covers the top stocks. Let's look at where the market is going. So the market is filling our gap. And so if you don't know about this, we talked about this before, but 9 times out of 10, a gap will fill. And what is a gap in the market? A gap is a difference in price between the closing and the opening price. So what we see here is that the market on Friday closed right here at 392.24 roughly. And then it opened this morning at 393.14. So there was a gap between the closing price of the previous day and the opening price of today. And that gap is what is this distance is what's called a gap. And so the market, regardless of direction, like just because it's trending down doesn't mean it's going to continue to trend down. What happens is it fills this gap, and you can see here it fills this gap, and then it picks the direction it actually wants to go. Now, again, we're almost towards the end of the first 15 minutes. We have 3 minutes left. 2 minutes and 45 seconds to be exact. But we have a little bit longer until we have the 15-minute directional play. What does the 15-minute directional play mean? It means that the 15 minutes, the first 15 minutes gives us an idea of how the market will perform for the rest of the day. And how we look at that is we take a look at the high from the first 15 minutes. And we take a look at the low of the first 15 minutes. And then we look at the range and we assume the range is going to be extrapolated out. So the good sign here that I see so far is the green candle right here. Ooh, sorry. Yeah. Why is this a good sign, or at least at the moment? Hopefully, if the green continues, is because of this, right? We had a put a push up this morning, then we started trending down. Then once we hit the support level, we validated the support level, and now we're trying to push higher. What we're looking for on this candle, which has about 20 or has about 45 seconds left or 35 seconds left, is we want to see this break above this level right here, the 392.70. It's having a hard time forming a top there that it can't break. Again, if it can break that, then we have a chance for it to go back up. But again, it looks like it's having a little red candle, looking like it wants to retarget this low. And if it wants to retarget that low, that's going to be a very bearish outlet for the day, and the downtrend is probably going to continue. So yes, this candle is about to close. It's going to close red. It's going to close probably around 392.45. And again, yeah, that's going to push down into that level. And then the candle closes, and now we're going to break down. So this is forming a little minor triangle breakout to the downside where we're going to see basically, yes, a move there, and then we're going to hit here and then break through. Yeah. So we're breaking through this. You can see here this was a solid, the close of the previous day was a solid resistance point. So now that we broke through, we're making more momentum down. And so this momentum is just going to carry down. You can see here we're still in the first 15 minutes. So again, this is the last candle to form the first 15 minutes. And what we can see here from the first 15 minutes is that we're trending down. We're towards the lows of our previous range, which means that we're going to be expecting a very bearish day or a very red day. So again, what we're looking at is we're probably going to target this low around this level and hopefully hold. But if not, we're going to even crash below that. But it looks like we have the chance of going all the way down here again. So looking like we're going to have a very bearish day in the market. See, first 15. Okay, we are now officially the first 15 minutes of the market open. And yeah, we are trying to push higher. Doji candle strong here. So we ended up actually having more of a bullish sign. Again, not completely bullish. But what we're seeing here is that it tried to break this strong support level. Then a doji formed. A doji is indicative of a reversal. When a doji happens at strong levels, that's indicative of a reversal. But you see, we can't even hold this green candle, which is not a good sign. What you want to see for a reversal is this: a downtrend, a doji candle like this, small body long wicks at a support line, followed by a strong green candle. The fact that this candle has come down so far in the red is not a good indication of a reversal. It shows a weakness actually with the bulls in control, with the bears in control. So yeah, we're most likely going to head lower on this stock right now. So an option for today's trade, again, do your own research. This is not trade advice because I'm not a financial advisor or recommendation anything. But it looks like, we're going to have a very bearish day to take up some. If you want to trade on a shorter time frame, more of a day trading type strategy, you could buy puts with the idea to target 390 by placing a stop loss around 392.72. So again, you have time to get out early with the chance of making it all the way down here. You can use SPYs Wednesdays expiration calls with a strike price of around 390. Anyways, for those who are live, thank you so much for watching. Again, if you want me to break down any of your stocks, anything you're looking into, feel free to put those comments in the comment section below, and I will see them and we'll answer them. Or if you just have other questions in general about strategies or whatnot. And lower we move. Yes, see, we're just breaking down and targeting this level as we discussed. Nothing too crazy. What we really looked at, what's happening from the calendar, from the news should have come out already. Right here. No, that's Monday, Tuesday. Right here, USD 945. Oh, I'm waiting for it. 10 a.m. or just 9 a.m. Okay, so we have actual forecast and previous. So we were forecasting 44.3 on the final services PMI. We got 43.7. Obviously, price market index is lower. It's lower than expected. So that's not the best. Well, actually, I think it's better, isn't it? We want price market index to be lower. Yeah, we want price market index to be lower. Project Management Institute. That's exactly what I'm talking about. Whatever. All right, we're kind of having our first green candle here, so maybe we'll stop it. Probably not. I don't expect much stopping it. Anyways, let's take a look again at our overall game plans for the day. Zooming out a bit. So you can see here, we had this strong resistance that we just could not hold, right? This resistance that plays into the previous day. So again, I'm going to lay out our three game plans. There's always three game plans. We have a bullish game plan, a neutral game plan, and a bearish game plan. Although the 15-minute analysis of the first 15 minutes shows that we're going to have a very bullish day. Here's kind of what the setup is. Option number one, we have a bullish day. We break above this level and we target this level. There we go. Probably not going to happen since we're far below it. Option number two is bearish day, where we break below this level, which we did, and we target this level and 390. We either find support here and trade within this range between 392 or 393 and 390. So we trade between that range. Or we break below this level of 390 and we head higher and have a huge crash or like a huge movement down, something like this if it breaks this level. If not, we're going to stay within this range of 394 and 390, and that's going to be our neutral day. So those are your three different game plans for today. Right now, again, the bearish one is playing out. That's kind of what we're seeing. So anyways, guys, thank you so much for watching on the live stream. If you don't have any stocks you want me to look at, that's about it. We covered the market. We covered some top stocks. We covered some other topics as well, like how to grow a small account. Video number 1, which will be broken into video number 2 and 3, which will come out Wednesday and Thursday. So that will be coming soon, and stay tuned. Outside of that, it's been a great day. I will see you guys tomorrow to talk about markets, talk about top stocks, talk about strategies tomorrow morning at 8 a.m. Central Standard Time. Thank you guys so much for watching. Have a great rest of your day. Enjoy your day back to work if you're at working from Labor Day. And it has been a fun one, and I will see you guys tomorrow morning.